Okay, so the way that I see it is it's a binary institutional ideological battle between the extremes. You have the Republican Party, which represents a political economic ideology that they are willing to fight for in a winner-take-all and a prisoner's dilemma scenario. This is game theory, okay? So it's 0 and 1. The battle is between Keynesianism and the Democrats, and monetarism and the Republicans. And it is a binary fight. It is a winner-take-all fight. They are willing to push to the economic and political extremes to get what they want, to try to get concessions. And if they don't get concessions, they're willing to take down the system. So let's look at the political economic ideologies, because then when you're conducting the political and policy analysis, you can see the ideological frames, the ideological lenses in which policy is being formulated, battled out, and eventually enacted. And that should give you an indication of what type of outcomes you would be confronting as a manager. So Keynesian industrial policy is Neo-New Deal. Basically, Franklin Delano Roosevelt, New Deal, Keynesian approach to curing market failure in the economy. Representation of labor and wages, focus on infrastructure investment, technology, institutions, governments as institutions as a positive force, focus on equity and utilitarian outcomes, production and manufacturing, domestic comparative advantages, full employment, individual social rights, budget surpluses, fiscal policy, public goods, and regulation. And lastly, the Democrats could be considered progressive Democrats. Versus the Friedman libertarian ideology, liberalism, free hand, deregulation, market approaches. Capital focuses on capital formation, capital distribution, taxation, interest rates, costs of capital, interests, using markets to effectively allocate savings to investments, to reallocate resources, using markets. Manifestations of price bubbles, again, redistributions. Let's allow the markets to bubble. If the markets bubble, it's a natural behavior of markets to bubble. Distribution. We distribute, or they distribute by class, by certain groups, by class. Focus is on finance, using finance mechanisms to distribute and to allocate resources and to manage the economy. Focus is on services, globalization, mitigation of inflation, private property rights as opposed to public property rights, or private goods as opposed to public goods, deregulation, are willing to run budget deficits because they don't matter, in the use of monetary policy, particularly the Federal Reserve, which is controlled by the banks. So again, it's binary, it's winner take all, and if you hear and you look and you listen to the sound bites and the policy statements that are coming out of Washington, both from the House representatives, Senate representatives, and the President, they are pontificating these ideologies. And again, it's a political battle for economic resources, and it's a winner-take-all. Because we're looking at basically a $16 trillion economy. That is a lot of wealth and power. And that's why they're willing to battle it out so extremely. The Greenspan critique, and this is another perfect example of political philosophy and ideology from an economic standpoint, is Greenspan had his own ideology, his own philosophy, which was progressive, which was monetarist, which was Friedman in orientation. You know, he was a big reader of Ayn Rand, who believed in individualism and individual rights, and that manifested in his ideologies. He developed a new business cycle that privileged financial capital markets over labor markets. The major shift to preemptive monetary policy strikes towards inflation targeting. If the economy looks like it's overheating, unemployment's too low, employment's too high, we're going to raise interest rates and we're going to prick the inflation bubble before it manifests and starts to affect the bond market. So his focus was really on inflation and interest rate targeting, not full employment. And away from full employment, wage growth, and targeting. What's interesting now is Bernanke was basically the same, but Yellen is more focused on full employment and raising the participation rates. So we have a new political ideology within the Federal Reserve. The foundation of monetary policy was deregulation, a financial boom in the stock and the real estate markets and free trade, driving up consumer consumption and debt levels. And that's still manifesting today. The results were a cycle marked by deindustrialization, growing trade deficits, financial market price bubbles, dollar overvaluation, long-term decline in real wage growth, growing household debt levels, and underinvestment by business in the capital stock. The risks of these post-policies, post-ideologies, is you have a fragile economic recovery, high debt levels, underperforming labor markets, exposure to financial market corrections, moral hazard, and Fed intervention to rescue the markets, but also the banks. So then we'll do it again.